I have the formula, okay? So oil has been absolutely pumping, okay? But now watch this, okay? So if we go to the futures market calculator, long position, at a entry price of 66.61, okay? So that is around here, right? So you have an entry price, okay? Just stay with me now. Entry price here, stop loss somewhere at this low. Technically, the stop loss should be down here, but for example's sake, we're going to say right here, okay? Now, your main target of $95, which we'll get into in a second of why this is, okay? Now, your main target at $95, you entered oil a long position before this war started, targeting $95, okay? Take profit, $95, stop loss, $58, okay? Which was around where we have it right now. Now, okay, just one contract. You could have made $28.4 thousand and only risk $8.6 thousand. And of course, you can go into a smaller contract, risk less. But this is just for an example. You could have just made $28,000, over $28,000, if you just have the formula, right? Now, most of y'all are super, super close. You're just not there yet, okay? So let's break down why oil could have been predicted before this massive up move, and you could have just made $28,000. Now, I don't trade futures much. I trade stocks, but this is definitely something I'm going to be getting into, okay? So now let's break this down, all right? We have a wedge. Now, for some of y'all who don't know what the wedge is, right? Because this is my entire formula that I use for stocks that you can also move over to oil like I did, all right? So this is the formula with this wedge. Okay, a wedge is just a pattern in a market where price compresses down. It gets smaller and smaller and tighter until eventually there is a catalyst or a ton of volume to signal a break out of either direction, but mainly to the upside since this is a falling wedge, okay? Now, I draw this on the weekly time frame, sometimes daily, but mainly the weekly time frames on the higher time frames, of course, in a bigger picture of things, all right? Now, when you draw the wedge, you must draw it where all these points are aligning up, right? You should be able to see a line, right? Now, this comes with a lot of experience and a lot of practice, but you should be able to see a line where price tends to go to and keep rejecting, okay? So we're going to figure this out I'm going to go through this with y'all. So if we put this trend line at the top of this wave B, right, then, if we follow this magical line where, oil is rejecting, see, something just doesn't look right? I mean, this is valid. Don't get me wrong, it is valid, right? But something just doesn't look completely right because you can see that price made a false breakout here. We didn't get a super, super clean break. So maybe something's not right here, all right? So instead of moving our trend line to the top of this wick, we're going to move it to the top of all these small wicks right here, okay? And now, obviously, these candles are poking above, so we must now fix this trend line. Bam. That is the proper trend line, right? It is near a diagonal. It's not completely flat, although it could be for a triangle, but it's not completely flat. It's not straight up. It is at a diagonal, right? Now we can see that we have 1, 2, 3, 4 touches, and then we broke to the upside, okay? So wedges need to have at least 3 touches on each side for it to be valid, right? That goes for trend lines. Really, it's a trend line rule, but for wedges, it goes the same way. 3 touches on each side. So that was 3 to the upside, okay? Now, let's look at the downside. We have 1, 2, 3, okay? So that is 3 touches to the downside, all right? Now, what you need to do as a specific game plan for you to learn this a lot better is to go on to any ticker that you want or any stock. You start scanning stocks and find a falling wedge and also a rising wedge. On the weekly time frame, if you struggle to find on the weekly, then go to the daily. Okay, but go on the weekly. Copy my chart in oil first, right? Break down what I'm about to show you, and then go through it from there, and then move on to stocks and anything else, and find a falling wedge and a rising wedge. Okay, so This is how we actually read the structure of the wedge. Okay, I'm not going to go through how to actually draw the wedge because I'm sure y'all already know how to do that. And I also just went over it with you a little bit, right? And it's also the same thing for this downside, right? Downside, you need to find area where all the wicks do align, which is this area right here, where there's not really any false breakouts. There's not really any invalidation here, right? To be held it as support, as you can see, okay? Now, to actually read the structure and actually make money from this, right? Just as I showed you, you can make $28,000 betting on this oil shock going to $95, okay? Now, most people know how to draw a wedge, but they fail to actually profit from these moves, okay? They fail to actually make money because people teach you how to draw a chart. People teach you the mindset of trading and investing, but they don't teach you your own infrastructure of how to actually profit from these moves, okay? And that's what I'm showing you right here, okay? So, I use Elliott wave theory for those who are new. And with Elliott wave theory, a falling wedge has 4 waves. A, B, C, D, and E. That's the 5th wave. Sorry, I can't count. I dropped out of high school, so I can't count, obviously. But 5 waves, A, B, C, D, and E. Okay. Now, wave A will go on the bottom part, okay? If for a bullish wedge. For a falling wedge, A will be at the bottom while 0 goes above here, right? So before we make a bottom on the start of this falling wedge, we usually will have a up move going onto that bottom like this, right? So we consolidated, price consolidated here, then we had a down move and then a sharp move up, right? That signaled a bottom there. Now this is where you put your wave 0 at, and then wave A for that down move, right? Before the very bottom of the start of the wedge. Now wave B goes to the top touch of the trend line or of the wedge, and then wave C will go to the bottom touch, right? Now that bottom one can be down here, can be over here, doesn't really matter, right? So wave C, okay? Now we ignore all these touches up there, right? Because it must touch up top and then it must touch the bottom in order. If it touches up top, bounces halfway, touch the top again, and so on, that does not matter, does not count, okay? We must touch the bottom one with wave C, and now we must touch the top with wave D, and then again, same thing with wave E. Now, each one of these has what's called a sub-wave, okay? It's basically a certain pattern of how these candlesticks move in order to actually predict these waves, okay? Each one moves in a 3-wave pattern, A, B, and C, okay? And so it looks something like this, right? We'll go for wave A, we'll go for a higher low, which is wave B, and then wave C will push us higher. Same thing for this wave C. We'll have a wave A right here, wave B, and then wave C. And then we'll do the same thing for wave D, A, B, C. And then same thing here, A, B, C, right? Now, there's no specific rules of the ABCs other than wave B can't be higher than wave A, and wave C must be below the start of wave, or the end of wave A. So wave B can't be up here, it must be in the middle, and wave C can't be right here, it must be at the very bottom. Those are the rules for ABC. Now, this isn't really that important. It's just easier to read structure at the start, especially if you are new, okay? So now that we know how to actually draw this wedge, we know how to draw the A, B, C, D, and E, and how to actually expect to see these subwaves, which aren't a must, right? It's not something that you have to have you're trading off of. You're not trying to make money off of the subwaves, right? We're trying to make money off the big move like here, right? We take the sniper play and we take that money and we dip. We do not try to trade all these micro small moves, okay? So now, to the actual fun part is how do we actually expect a move to this main target, and why is this our main target, right? So the main target for any wedge, a falling wedge or rising wedge, right? And by the way, for a rising wedge, you'll do the same thing for this falling wedge, but in reversed, right? So in order to actually get the main target, you must find the top or the bottom of the wedge. This is a bullish falling wedge, so you must find the top, okay? The top of this wedge is right here, okay? $94. Now, this is a very, very important thing, okay? The top, there's 2 tops, right? It's like a zone. The top is the wick, and the top by the body. So the body of this candle, of this very top candle, is $90, right? So now that would be your target zone, but most of the time, ideally, your main target is the very top of the wick, right? So I'm just going to remove that since we've already obviously seen it. So $95 would be the very obvious target for you. Now, why do we enter? How did we enter? Was our entry plan on this wedge for any wedge, right? So first off, before a wedge breaks out, now this does have an exception because of the Iran war, we will obviously bounce for wave V, go higher, reject, go down, form a higher low, and then break and go higher, right? Now, we had a war that was a major catalyst to push this higher. So for one thing, we didn't really do that, reject and then soar because we already pushed higher. But now there was another way we can enter a trade like this, going for a break, because you don't have to wait for that to happen. You can enter before, like, your ideal entry spot is obviously wave E, right? Now another one could be either as one, you buy at wave E once we start accumulating, right? So price went down to this trend line, started bouncing and accumulating. We even took out these lows and held it and even made a liquidity sweep, right? And then and also with a bullish R-side divergence, right? So we had a bullish R-side divergence, right here, okay, and on the daily mainly, and that's also a bullish confluence with it. Now I'm not going to go over bullish R-side divergences, but you can look it up. It's pretty simple, right? So bullish R-side divergence here. Now on top of that, of the accumulation, bouncing at the trend at the bottom of this wedge or the trend line. This could be one of your entries. Now, obviously, these moving averages are in your way, right? So if you want to enter, you can either enter one once we close back up into this moving average, but you're not really buying because we closed above this moving average. We're just buying because we accumulated, took out this low, we hit the bottom for support, and now you're entering here, and then stop loss at the lows, and then your target is, of course, wherever your main target is. Okay, now, your perfect entry with the most confluences with you is the entry right here at the close of this candle, right? Because we do love waiting for the candle to close, right? Now, as you can see, we accumulated, bounced at the bottom of this wedge. We cleared all the moving averages. All the moving averages are now getting a bullish crossover to the upside, and now we're holding these moving averages as support. So right now is a very, very obvious move to the upside, right? Now, again, this was weeks before the Iran war, right? This was on February 17th. So now you have your entry near that weekly close. Stop loss needs to stay either at this major low or at the low for the trend line. Now, ideally, it should be this low right here at 54.98. But however, that is a really big stop loss. So depending on how much you want to risk and depending on you and what you think is going to happen, you can change that. But ideally, your stop loss should be at the low, right? And this actually helps manage risk, which will be in a separate video of how to actually manage risk in any trading. And that is your stop loss stays the same wherever you enter, right? So obviously for this wedge setup, we know we cannot break that low at 54.76. We know it, right? If we break it, we invalidate it, right? So that should be where your stop loss is. Your stop loss should not be made based off how much money you're going to lose. It needs to be off of when your setup is going to be invalid, okay? Which will be 54.76. So now that might be the question is, okay, well, is this entry at 66 too high for me, right? So are you risking too much money for your portfolio? Then you missed the move, right? Or maybe you need to move your stop loss a little bit closer and risk getting stopped out before the move, right? So this is all up to you, but ideally, your stop loss needs to be where the setup is going to get invalid, which is why it's very, very important to get the best entries and nonstop be watching what you're trying to enter and watch your setups, okay? Now, let's just assume you can risk this much, right? You set your stop loss at the low, right, where your invalidation level is. And then, of course, your main target is where your main target is, right? Your top of the wedge. This right here is how you execute a $28,000 trade to go onto oil, okay? Now, you can do this with almost any wedge on any stock, right? Any stock, any futures, anything, right? So hopefully you can learn something. Now, also what to expect, right? Of course, when we do break above this wedge, we do expect a retest at $71, right? And we did get it on the daily time frame. We did retest it, right? Now we didn't get it on the weekly, however, but that is a-okay. So now also once we see the main target anything higher is extra, right? Once you see the top of that wedge, anything higher is extra. All you need to see is the top of that wedge. So if you're trying to target this high up here at 130, we very well could see it, but it's just not worth the risk, right? You're up so much money, it's not worth the risk, right? So we just target the main target, which is, again, the top of the wedge, right? Now, you can add confluences with this, of course. Moving average, this was our confluence. The bullish RSI divergence, this was also our confluence. The macro condition with the economy right now is also another confluence for this oil trade. Now, I took advantage of this with CVI. Now, you could have taken advantage of this with future contracts. I just don't trade futures, which I am getting into. So this was basically how you could have executed oil off of this wedge, what I expect on this wedge, and how to actually play it. Now, there's one more thing that I will give y'all for free. Now, I usually don't give this out for free, but here it is. Okay, so this is my entire strategy kind of broken down on this photo, right? Now, I usually give this out to my members who subscribe to the chart program and our coaching members, but you can have it for free in this video because I do want to help y'all out, right? I feel bad, right? So first one, what price will do before a breakout of a trend line or a wedge or a triangle or whatever, any line that goes diagonal, like a trend line that's resistance, this is how we react, right? A rejection, a bounce at the 50% fib with support or the buy zone or high or low, however you want to look at it, and then we break, retest, and see the main target, right? You can also see it like this. The trend line resistance zones are this, okay? Every single touch to this trend line or a wedge is resistance, right? This forms a resistance zone, which you could be taking profits at, right? And of course, your short-term resistance, which is your main target. Once we see main target, we go back down to that retest level, and then we can either go higher or lower. Doesn't really matter. It depends on your chart at that time. Now, this right here can make you a ton of money, like we just went over, an absolute ton of money, right? We just see this oil trade right now, which is insane, right? It's it's not common at all. It's very rare, right? You saw how long it took for this to set up. But when it gives you the setup, you need to be there to take advantage of it, okay? So that is the formula of how to actually trade wedges. Now, if you'll want more in-depth videos of how to actually draw this wedge with many more examples, then comment wedge below and I will make a new video explaining exactly how I drew this wedge, and I'll go over some more examples with you. I'll see you in the next one.